So welcome everyone. In this session we are going to learn about type of taxes. What type of taxes? So the income tax in India. The income tax in India includes all income except the agricultural income, right? All income except the agricultural income. So that is levied and collected by the central government. So this particular income is also shared with the states. So as per the Income Tax Act 1961, okay. So one second. So as per the Income Tax Act 1961, okay. So the assessee whose total income level is more than maximum exemption limit. Okay. Maximum exemption limit is under the domain of chargeable income tax. So previously it was like the agricultural income that is levied and collected by the central government. Okay. Taxes regarding agri income that is levied by the central government, right? So the income is also shared with the state also, the state agriculture, I mean like the farmers in the state. Definitely the state also has to collect the income tax. So as per the Income Tax Act 1961, so the assessee, actually their total income is greater than what exactly the maximum slab exemption limit. Okay. Maximum exemption limit. He has to pay what? He has to pay tax, right? So have an example. The maximum exemption limit is 5 lakh. 1 2 3 4 5 6 5 lakh. Then if I am earning more than 5 lakh, definitely I should have to pay tax. That is what exactly called maximum exemption limit. So maximum exemption limit is 5 lakh, and if I'm even 1 pi I'm earning more, I have to pay the tax under the domain of chargeable income. So the assessee has to pay the income tax at the rate stated in the provisions, I mean like uh, of the Finance Act actually. So the payment of income tax is to be calculated on the total income of the last year. So last year is assessment year. Assessment year. So the tax will be calculated for the assessment year, not for the financial year. So what is the assessment year of 2022? It is 21 March, sorry, it is 1st March 2021 to 20 April, sorry, I'm so sorry, 1st April 2021 to 31st March 2022. All right. And the financial year of 2022 is what? 1st April 2022 and up to 31st March 2023. So the financial year we'll prepare budgets and all. For the assessment year, what exactly we have earned, what exactly we have you know engrossed in wealth. So everything will assess in the sense the previous year will take for the auditing. Okay, so the payment of income tax is to be calculated on the total income of the last year or assessment year. Okay, total income of the assessment year of an individual. The residential status in India is a necessary parameter. So the Indian citizen or who is working in India, a foreigner working in India, should also come under the purview of a what? Purview of Income Tax Act 1961. So the charges have been known as the structure square of a human progress. So actually, charges, uh, no, extracted actually the main sorted out society of a record. So where their installment conveyed incredible religious significance. So the expense were additionally a crucial piece of you know antiquated. Antiquated means like immemorial. So the tax, all these kind of things have been, we actually Indians adopted from immemorial antiquity. Immemorial antiquity means we cannot remember. Immemorial, right? So as per the study, the taxes, all these kind of things came from Greece and Roman Empire. Okay, there are religious part of a tax. Religious part of tax were imposed in Greece and Romans, etc. By the chapel. Chapel means the the Christian missionary. Okay, so that was the origin of income tax. That is the first type of tax, income tax. The second type of tax is called as sales tax. Income tax we'll learn in detail. Okay, this is uh, uh, an overlook of every taxes. So sales tax. So what exactly sales tax? The sales tax is charge on the sale of a movable goods. Okay. Sales tax is charge on the sale of what? Movable goods. What is movable goods? Everything which can be movable. Okay. Okay. A property is not a movable good. If you have 10 cents of land, it is immovable property. Okay, immovable property. So sales tax is only for movable property like a no detergent, surf excel, wheel, legs, whatever it is which can be movable in the market can be called as a sales tax. Okay, so sales tax on interstate sale is charged by union government. Like if something is coming from Gujarat to Kerala, so it will be dealt by whom? The central sales tax. Okay, if it is an intrastate, that means from a state to different places, the state government will take care of that. Central government here, different states, state 1, state 2, the central government will take care of that. Okay, so within the state or intrastate is charged by state government. So the tax charged by the state government is termed as what? Government is called as, previously it was called as VAT. Okay, now what happened? in the amendment of 2000, I think 2018 of a Sales Tax Amendment Act 2018, the the VAT has been abolished, and we came with the what? We came with the central government, state government. Sales tax can be called as goods and services tax. Okay, goods and services tax. Here we only talked about sale of mobile property, but in GST we learn GST also learn about goods and services. If you go to an hotel, okay, if you are going to an hotel, definitely services tax should have to pay. Okay, if you are running a business or a partnership firm or a company, if the company is whatever it is, okay, if it is a one man company or non-registered company, if your you know if your turnover is more than 20 lakh, okay, more than 20 lakhs, okay, you have to apply for GST number. Apply for GST number, whatever it is. Even a roadside vendor is making money more than 20 lakhs per annum. Definitely, he has to register uh, for GST. Okay, so sales tax can be broadly classified into interstate sale, sale during import export, and intra-state sale. So we can classify it into interstate, that means inside the state, okay, then sorry, not inside, outside, in between the state, intra-state, okay, that is inside the state, and what exactly, import export. So if you are importing something or you are exporting something, you have to pay the tax, sales tax. So the state government can impose sales tax only on sale within the state. Okay, so central sales tax is payable on inter state sale, previously, but now everything has changed. Come in the purview of GST. Okay, that is goods and services tax. Next is no. Let me talk about the services also here. If we talked about a GST, so let me talk about a services. What are the things comes under services? So GST is goods and services, right? So I didn't focus about the services. So most of the paid services you avail, okay, are saddled with the liability to pay service tax on those services, like a hotel service, right? Room services, right? Even a servant come to your home, you have to pay service tax to them. Okay, even I used to pay service taxes, right? If I am taking a class, I have to pay service taxes to the government. Okay, so this tax is called a service tax. So over the past few years, service tax has been expanded to cover new services. Like we have to pay telephone, no, telephone service taxes. Have an example: your service provider, Airtel or other service providers, they will take service taxes also. Okay, then if you are going with Thomas Cook for a tour or a Club Mahindra, they will take tour operator service tax, right? Then the architect engineers, if you have given a work to the architect and engineer, definitely they will Take the service tax. Even a teacher, then accounting professional, then what else? Banking. Yeah, you can see your bank account has been no debt with uh, some service charges, right? The maintenance service, banking itself, they will call for maintenance service, right? Then consultancy services, then health, hospital, restaurant. So this service provider ultimately passes on the liability to the, you know, it is the super bank on the actually backside of the customer, right? Right. So the service, I mean, like the customer has to pay the service tax. Next is what exactly excise duty. What exactly excise duty? So excise duty is a tax that is levied on all goods manufactured or produced in India. Produced Indian territory, right? So it is different from customs duty because it is applicable only to the things produced in India, right? Produced or manufactured in India. Duty I will explain. So actually excise duty is also known as the central, you know, VAT, central value added tax, or sen VAT. Okay. So the tax is collected by the government from the manufacturer of the goods. It can also be collected from those entities that receive manufactured goods and employ people to transport the goods from the manufacturer to themselves. So I hope you know about the system of, sorry, it is, there is only one A. Okay. So the manufacturer will take it from the wholesaler. Okay, wholesaler has to give VAT to the, so wholesaler will receive VAT, no, receive from whom? The retailer will take it from customer. Okay, so this tax is collected by whom? The entire the main, I mean, like the government will collect this tax first. Good. One second. Yes, I'm coming 1 minute, give me 1 minute. Okay. Yes. So what exactly the central government excise rules provide that every person who produce or manufacture any excisable goods or who stores such goods in a warehouse will have to pay excise duty. No excisable goods will be allowed to move without payment. So you cannot take no the product outside from the manufacturer, no inventory without the bill or payment details. Okay. So that's why you can see some excise uh, in, I mean, like people, you know will stop the vehicles and check all these things. Okay. Especially you can see the GST people, I mean, like the sales tax people, you can see on the road. Even excise duty people can also see on the check post. Okay, on the check post. So that is excise duty. What exactly custom duty? Customs. So custom duty is payable on any goods imported to India from some other country. So it applies to all the products that come via land, sea, or air. So the custom duty is levied or leviable even to product bought in another country and bought to India. Okay, if you are going to China and buy something from China and you are importing here, have an example, electric bikes. You are going to China and bought 100 electric bikes and importing to India. Definitely, you have to give custom duty. Hope you heard about uh, the custom has got um, gold smugglers. So if you are coming with the e-bikes, electric bikes, without giving the custom duty to India, without giving custom duty to India, okay, what happens? What happens? Definitely, it is a smuggling. Smuggling. You can bring as much gold you want. Okay, there is a permitted limit, but if you are getting the gold to Indian territory, definitely you have to pay. If it is excess to the permittable limit, definitely you have to pay 30%, 30 or 40% of a custom duty. Then it is legal. Then it is legal to evade the tax amount, the custom duty. They will smuggle it. Okay, they will hide somewhere, and even we have seen gold have been, you know they put the gold inside the stomach. They swallow the gold bubbles inside the stomach. They made gold into powders. you know they are making the custom people very very trouble. Custom people will frisk it and they will definitely take it. you know so what exactly they are doing? We call it as smuggling, but they are evading, tax evading. The smugglers are tax evaders. That's it. It is not unauthorized gold or anything, something like that. They bought it from, have an example, they bought it from Dubai in a cheaper rate without any tax. And what exactly, 30% tax is a huge amount for them if they are coming with a bulk. Definitely, then if they are paying 30% tax, definitely there is no profit. It is similar as like the gold price in India. So they have to evade. So that's why it is called as smuggling. Okay, the custom duty is leviable even to the products bought in another country, as I said. The purpose of custom duty is to ensure that all goods entering the country are taxed and paid for, right? So the custom duty is often payable at the port of entry, like airport. You can pay custom duty. Okay, whatever it is, you are coming. No, you know that there is a case with the Kala Bhavan money. Okay, because he came with he's a film actor. He came with a gold ring, and it is beyond the maximum exemption. Okay, so he forced to remove that gold ring and submit it to the custom officer. Only thing is he has to pay the amount, 30%. He said that it was there with his hand while he going outside, I mean like outside India. But custom officer said, like, if you such kind of ornaments, you have to mention in your passport. Okay, otherwise if you are coming back you know with this kind of ornaments beyond what exactly mentioned in the passport, definitely you have to pay custom duty. They have a procedures. Okay, they have procedures. Next is entertainment tax, building tax, then land tax, property tax. So these are the major other taxes. So entertainment tax is levied on cinema, video shows, cable TV operators, amusement, recreation parlors, exhibitions, performance, pigeon shows. Then no, entertainment tax is imposed on featuring film or getting a wide release in India. So entertainment falls in the list two of a seven schedule of the Constitution of India. Okay, even DTH, desktop. Sorry, yeah, set top box. Everything is entertainment. They are taking entertainment tax, building tax. Anyone who possesses a building, either for residential or whatever business purpose, should have to pay building tax also. So like they have to pay it in panchayat or municipality or corporation where your building is situated or constructed. So it also has a different things parameters, like if your building is very luxurious, you have to pay proportionate to the luxury building tax. Okay, and some buildings have been avoided if the building is came under the parameter of a taxable income. Okay, as I said, the owner should in additional pay luxury tax for residential building constructed after a cut-off date, and if it is exceed a particular plinth area under your state, it is applicable to the state actually. So in Kerala Building Tax Act, okay, Kerala Municipality Building Regulations Act are there. Next is land tax. So land tax is levied on the um, unimproved value of the tax. So it disregard the value of building, personal property, and other improvements. So land tax is payable regard of how well or poorly land is actually used. That's it. So land tax is also known as basic tax. It is only very few amount. So this is the time we have to pay land tax, property tax, building tax from April onwards. Every year April onwards we have to pay, we have to renew the tax. Okay, next is property tax. What's the difference between land tax and property tax? I will explain it. Like property tax includes like a land. Okay, most basic form. Basic form. It shall not be a agricultural land. It shall not be a land which is used for cultivation. Land which is not used for other purposes, like some land may use for you know uh, maybe laundry people use lands, right? So that land, they don't have any building or anything. So actually property tax is purely a pure land which is not used by anyone. It is most basic form of land tax. Then if you are making any improvement made to the land, it is considered as a property tax. Okay, then the property tax is the yearly sum paid by landowner to the neighborhood government or the municipality corporation of his territory. So the property incorporates all unmistakable land property, his home, place, okay, of business and property he has leased to other people. Have an example. This property, if you are giving this property to lease or rent, so you have to pay property tax. Land tax is different, building tax is different. If you are owning a building and you are residing in the same building, you have to pay building tax. If you are owning a owning a land and it is purely vested with your control, you have not at least, then it is land tax. If you are lease the land or rent the land or rent the building, definitely it comes in property. The tax you get, I mean, like the amount you generate from a property, from a building or whatever it is, you have to pay property tax for the amount proportionate to what exactly you yield from the property. Okay, so when a building and land become property, if you are leasing it out, okay, so have an example. um, Movable property is there, includes movable like car, buses and all, right? Intangible property, patent, copyright. So all kinds of things comes under property tax. So property is considered as the safest and smartest form of investment today. So every property is an asset which is taxable, and the government tax is annual paid. Even patent, if you are generating money from your patent, definitely it is a intangible property. You have to pay property tax. Bike, car, bus, lorry, that is property. You have to pay property tax. Building and godowns, you have to pay, which is leased out. Land, which is most basic form, and which is you know given to um, given for parking. Have an example. For parking, you have to pay paid parking. You have to pay property tax. So thank you so much. This is the end of today's session.